We're going to be breaking down UJ. UJ is showing some interesting pattern that has happened in 2023, and I'll show you my outlook. So when you look UJ in the daily time frame, we're seeing price has been in this continuous move to the upside, yen losing its strength, then dollar gaining strength. So we're seeing pattern creating high highs, high lows. So basically, currently we're seeing price is now respecting the 50% Fibonacci retracement. Why is that a key factor? When you look at your left, we're seeing not only did this area act as a resistance, but also acted as a resistance in this small accumulation phase before price broke out. And we're seeing price now is retracing this area here, 50% Fibonacci, and also this area of support which acts as a resistance. So why do I pinpoint this? Because on Monday tomorrow we could see a potential, either because we're seeing multiple weeks here, we're seeing buying pressure coming in, 1 2 3, so we could see probably a small retracement to this level of liquidity here. We're seeing these weeks here, and also there's this strong wick indicating it's gonna be so difficult for price to penetrate higher. So we're gonna see a slight retracement probably to this level here before a sell-off, and I'll tell you why. So when we look back, I want you to pay attention to this structure here. So this structure here looks too similar, like back, yeah, it was back in 2020. So we see we had price creating high highs, high lows. Coming here, we had some sort of accumulation phase, and price went to the upside. Then what happened is we see not only did price had a huge rejection to the downside, then we had like some small drop, then we had a price appreciation towards this level here before a massive sell-off. And this massive sell-off went to this trend line. So when you look currently what's happening, we're seeing price was creating high highs, which is the same as this point here, went higher, rejected. So we're seeing price went higher, rejected, then price came down. So what are we expecting? Like based on this previous cycle here, we're seeing not only do we see a nice rejection from the up and the bottom, and we see price melt down towards this level, right? And we see price retrace. So how do we calculate the retracement? We could pull up our fibs from the top to the bottom, and we could see price at least not only retraced 50%, but also at least went close to this zone here, which act as a, when you go to the H4, you see, let's look closely. What are we seeing? We're seeing nice drop, some sort of like recovery drop, then price now went to revisit that area. Why is it key to look? So this is when we created that lower high, then we see price broke to the downside, and this is the area you need to pay attention. We're seeing also structures like these sort of structures, which is very common in forex. Sort of these structures, you could draw it something like this. It doesn't matter. So we're seeing like a flag to the downside, and that's the same structure we're gonna see here. You see, we see nice rejection to the upside, and price move down. So the reason why the reason why I'm looking at a down setup is because we've seen not only did this pattern repeated before, so I'm expecting a similar move, but also I don't think the US dollar, they're gonna increase any interest rates. They're not gonna hike the interest rates. Why? Because the more they hike the interest rates, it's gonna cause the Japanese yen to weaken, and if Japanese yen weakens, it's gonna be very difficult for global competition. So it's gonna decimate all the Asian pairs. So I think it's very important for us to look at a potential retracement of the yen to the downside, meaning yen has to gain strength for it to compete in the global market based on the interest differential, right? So when you look at our Fibonacci, we're going to pull from this high to this low, at least a 50% retracement. So why am I saying a 50%? Price could come to 50%, but the first level I'll be looking at is this area, this red zone here. Why? Because you see, price was trying to break out of this. Then we see a massive liquidation, massive liquidation, liquidity grab to the downside, went up, rejection. Price also came down again, testing this liquidity level, rejected multiple times, one, two, three, four, five, and went higher. Then we're seeing this price move to the downside, right? And also, if you would just pull up a field from this, let's say from this high to this low, we could say price retraced 50% Fibonacci, and price went all the way to negative 0.618. So we could say this is a completion of a market structure. So we could say, okay, yeah, we could pull up our fibs from this high here to this low, and we could expect price to come to 61.8, or Fibonacci from this high to this low, or we could say from this high at least 50. It really doesn't matter, right? So, but I'll be looking mostly in this zone here because it's a key level. So I'll be looking for price to you could be looking either for some buy setups here, as if price is creating high highs, high lows. You could be looking for buy setups until price reaches at these levels. Then you'll be looking like, okay, now I have to be careful, and you'll be looking for shorts opportunities. Same as what happened here. Same as what happened here. You could see some sort of rejection here. You could say, okay, price is creating high highs, high lows. You'll be looking for temporarily buy setups, and when price reaches those resistance level, you'll be looking, okay, I'll be looking for short setups, right? If price is still maintaining this high lows, high lows, high lows before a massive breakdown. And when we see here price broke down, when price broke down, it went to the trend line. So our first targets will be, after price comes high here, we see our first target to be trend line, then our second target to the other trend line, which is the same thing we saw here. We had this trend line. We had sort of this trend line. So a nice setup, then massive fall to the bigger trend line. So that's the same play we're gonna see here. And it's not a guarantee pattern that's gonna work, but it's a likelihood of it going to work. So I think it's a valid setup. If you like it, comment below. Let me know what you think about it. And yeah, a nice buy setup or a sell setup. Either way, look for high highs, high lows here, breaking this structure. You could look at lower time frames like M30. You could see if price started creating high highs, like high lows. You could be looking for buy setups to this area of resistance. Thank you so much.